Hey, Steve and Andy, how's it going?
Hey, Scott. Wait a minute. Let me take my mask off. There we go. Hey, Andy. How's it going?
Doing good. Hi, Scott.
I've
Hey,
been waiting to
Steve.
do that. Yeah. All right, everybody. Thanks for showing up to the trade of the week. Hopefully, my mic and Andy's mic's a little bit more solid. Scott's working on remote, but we heard him. We heard you, Scott. We're good to go. All right, let's get started. The beginning trade of the week disclaimer as people continue to file in here. And boy, it is nice to see some record crowds. So people are taking on new activities, learning to garden, play a new song on the piano, or learn more about the markets and trading. So you've come to the right spot. But before we get there, we got to just remind you that we are not brokers. We're not registered investment advisors, and we're not giving out financial advice. We're on user number 3 and Andy's user number 4. It's a very rich product, and we're here to help you kind of refine it to how you want to use it, whether you're a maniac day trader who's in for 5 minutes and out, trading on 1-minute candles, more power to you, or if you're somebody like myself and Andy, slowing things down and using it for swing trading. Either way, there's a lot to learn, and we can help get you there quicker through these webinars, through the live trading room like you see on there. And live trading room with Barry is open from bell to bell, and he always tells us to send people in there so he can demonstrate things. That'll be a pretty cool hangout, a pretty popular hangout, I'll say, during the upcoming test drive, which is next week. We're going to have a couple thousand people, maybe even more than that, come in and try Trade Ideas products. So it's going to be a lot of learning at once, and we're going to do our best to help people. But all these things will help. The daily support sessions, as you see, it's a live YouTube link, and you can really just jot this. Oops, you can jot that URL down at the bottom. It's trade-ideas.com/live. That is a redirect. It's a redirect pin there, and kind of take over and help people with the demo question and answer using the chat. And it's been getting pretty busy in there. The hour's starting to go by pretty fast now. You guys are showing up with good questions, so that is available to you as well. And so if you're new to my webinar, the theme is man and machine working together, no human. So, but man and machine combined is the way to go. And that's what we're going to try and show you here. As I said earlier, whether you're trying to swing trade, slow it down, or you're trying to be fast paced, we can help you. The market is a giant data fire hose, and if you try and drink from it, it's going to be hard. You're going to rip your face off. So we want to refine it down to only the things we want to see, and that's what makes it real simple. So no matter where we go forward in this new paradigm, humans and machines, or software algorithms, AI, whatever you want to call it, they're going to be working hand in hand together, and that's just the way it's going to be. All right, so we'll get into today's agenda. Market recap, hanging on by a thread. I'll kind of elaborate on that. Andy has some thoughts on some of the AI trades today, which, if you're brand new to the market and you have no idea what to trade or what to look for, that's what the AI is there for, to at least give you an idea of something to participate in. And then we'd like to help you all learn how best to manage those trades, because the AI isn't always exactly the best at getting out. We are better at getting out. Man and machine, AI gets us in, and the human will help get us out. All right, trade of the week is eBay. It's working, it's green. We'll see what it looks like. I want to talk about sim trading and what's coming down the road for some of the gamification that we're going to be doing with our Brokerage Plus sim trading module. And if you're not aware of it, it's a pretty cool deal, and it's basically attached to everybody's subscription, no matter what you have. The trade of the week was derived from a scan that's been doing kind of interesting stuff lately, and people have been asking for it. The jam down, we'll talk about that. And we'll even back test and refine it a little bit. If you guys, did see the email, there's the jam down, kind of show that it is in fact a pretty decent tool. Oh no, eBay after hours. It's a pretty decent tool for second. Actually, that's eBay. As far as I'm concerned, NASDAQ is still in clean highs. It barely held onto its 10 period, waiting to see. This will have the S&P. If we till then, the NASDAQ has, and I was back below it. If it holds that level and bounces, well then a process 200, and we need to see it hold this 50 in my user and clean air still here. They could reverse tomorrow and come back and very easily, technically, held above a couple of moving averages. Lastly, the Dow is going to look very similar to, very similar to the S&P. So we're just in kind of a holding pattern here. Is this going to be kind of a rounded, opportunity for the bears to jump back in and try and sell that? It's too early to tell. I don't know. I'm not going to pick a side. For now, I'm just kind of picking away at a few different positions to the long side and managing them accordingly. And we'll talk about that because I've got them queued up in the sim trader for some of the things we've been doing. So that's all I see really in terms of market. The treasuries, the TLTs not showing us anything. Gold and silver aren't really, gold's definitely flagging. It's certainly showing us that. You'll see when I go to sim trading, I'm still extremely bullish on the gold miners, which is GDX. I think you'll see in a moment how darn good they look. You talk about flying in clean air up there. It's about as clean as it gets up there for the gold miners. So, Mr. Andy, you want to add anything to this market segment?
No, I agree with you, Steve. If you pull back up the SPYs real quick. Yeah, I think the key levels you pointed out, especially the 20 period there, I think I think the bulls really want to hold that because we kind of got a trend line that since we bottomed out that we're trying to break right now. So think below that, and just remember when these trends break a lot of times in a bear market, okay, they can be very nasty. In other words, they go down a lot faster than they go up. So just be careful. If you're long and we break those key levels, it could get really nasty quick. But other than that, yeah, we're just kind of holding right out here in the middle of our basically looks like a 2-week range there. So still trying to hold I don't know. It's been slopping back and forth around that fast line. The lines get violated a lot when the action gets like it's been over the last couple of months. So that doesn't hold. I look mostly at the 50 period, the 200 period when you get action like this, and then trends. You see if it breaks trends. But that's about it.
It just occurred to me, Andy, what Andy's saying is when these fail up here, you can have an opening there, a gap down opening, and not even look back. And literally the first tick on the opening, and I'm going to show you something here, guys. We haven't seen this yet. And the minute Andy said that, I'm like, we haven't seen that. So I went back and I looked at our volatile period. Find me a gap with this gap down, but look, it traded all the way back up. That's not it. No gap there, but selling from the open, no gap there. Here's a gap down, but look, we traded back up and then closed on lows. Nice bounce. Doji, gap down, traded up, and then closed. So we haven't really seen what Andy was talking about, where you literally have a gap down and you don't even look back. I've seen these. These are ugly. These can wipe out people in a day. They're nasty because what happens is everybody's seeing the same thing, and there's not a bidder in sight. Anyway,
that's true.
I don't want to see that, but if it happens, we can't control it. We just got to trade the market we got. All right, some new scans. Yes, can you share? Yes, of course. We're going to go right into that now. Sheetal. First, though, I want to talk about the trade of the week. I believe that's what's next on the docket here. Trade of the week. All right, eBay. So it's a good segue into the jam down. Again, this is the jam down. And for those that don't know, I like to have contrarian indicators. And contrarian indicators, perfect example. Notice the blue arrow here today, and pause was making, here's the deal, it's making a new 5-day low, but, big but, it's doing it and it's only showing me 5-minute low. It's only showing me the 5-minute low once the daily chart is showing that the price action has dipped in and pulling back and touching the 10-period moving average. In my opinion, it's an algo-driven market and a quant-driven market, and I've noticed over the last couple of years especially that stocks with a decent trend often will have a contrarian move, like you're pulling the slingshot back. Now this arrow came through at 21.59, 21.50. Yeah, it's pretty much right there. So you talk about some pretty darn good entries. I'm going to say you talk about some pretty damn good entries. Accentuate that. This thing can give it. So I won't go to history, but on history, coming on Friday, little eBay was on there, and eBay had a beautiful trend, and eBay had a couple of AI buy tags of things that were happening. eBay had its earnings. It gapped down right here, and pretty much proved that it shouldn't have gapped down because it reversed quickly. Now that's extremely bullish. On a day after earnings, when you see a stock gap down and reverse with a giant engulfing green candle, chances are it's going to probably continue to build on that. So let me zoom in here to what we saw. All right, there it is. What I want to show you is, you see that little spike right there? That little spike triggered eBay on the jam down on Friday. So that caught my attention. You know, we're trying to use the tools of trade ideas to narrow down what we're looking for. And that's the kind of stuff I love. On the intraday, look at that. On the intraday, if I go back and look at it, it was pretty much that little guy right there. So boy, that's a nice looking entry if you can get it. So that wasn't our entry, but that was kind of our signal candle for what we wanted to do on Monday. And if you recall on the email said, don't wait for a price, just get in. The water's fine. I trust this thing, Andy trusts this thing. The 10-period moving average is showing us to trust this thing. And basically, the trade was on. Yesterday, everybody got a decent price if you took it. And today, followed through. Not only did it follow through, it gave us a wonderful example again of what I used to gauge the backdrop or the currents of what we had in the SPY and the Qs. But that doesn't mean anything. This is a swing trade. The swing trade is on. Did it close? Here's the big question. Did it close below the rising 10 period? No, it didn't. Stop on this trade is extremely liberal down at the 200-day. So as this trade starts to move higher, what I would probably do is start to use this rising 20-day as your stop. Brings it up, bring up the rear. I don't think it's going to come back and see this 20. And let's think about this a minute. This is kind of a COVID play. There's a lot of companies out there that are getting a little bit of a benefit from this new normal we're in. And I think it's not a shot in the dark to say there's a lot of people right now who might have some high ticket items, guitars and jewelry and whatnot. They could use a little cash. They don't feel like going to the pawn shop, but they're comfortable using eBay to try and liquidate some of the stuff. And of course, eBay makes money on high ticket commissions, sales and listings. So the market's a forward looking mechanism, and everything telling me that the market is okay with eBay looking where it is. Also, one of the things that caught my attention is there was our drop in the market. eBay is already back and recovered, and then some. That's extremely strong, extremely relatively strong. So if you're in eBay, I'm in it with you. There's nothing to do right now, but just sit and wait. It's very possible we could get a couple of days and move higher, and then you get that big pullback. It's a matter of whether or not you want to sit through that pullback. It's up to you. You can sell. I like to sell when things are going your direction, but I personally feel eBay probably has a lot more meat on the bone, and it's really nice to have earnings behind it as well. This is okay. This kind of midday stuff is okay. It happens all the time, usually in the last hour of the day. I like to see, I really like to see the first 2/3 of that day hold up, and then, we'll just see what happens tomorrow. So that's the trade of the week in eBay, and it was derived from this. So let's talk about that a little bit. The jam down trade, jam down. Actually, we'll get to that in a second. I want to talk about sim trading, and it all kind of dovetails together. But for those that aren't aware, this, you go to new and you go to Brokerage Plus and you launch that. Anybody can do that. Doesn't matter what subscription you have. Into that, and you got yourself. Maybe we have a swing trader competition. A really, really cool tool. What I thought I would do is just maybe go through a few trades. Again, you heard how I don't play till it was breaking above its 50-day moving average, as you can see there. I actually bought some yesterday. And added to a little bit today as well. But notice the sell tag. I mean, this is exactly what I've been talking about. I lost interest in this thing. I was interested on the daily in the morning because it was breaking above the 50, but all of a sudden it just languished and it couldn't stay above that moving average. And so, as you can see, the sim trade was a 0, got out for a simple little winner on a big simulated account there. But look at the pain I saved myself by just making my decision here, because the trade was not working. I was nibbling in it, trying to get it to go, and I thought, hey, maybe we got a shot here. But once it pulled back and just started to languish, you can see my sell tag. I got bored and said, nope, I'm going to wait and see if this thing can try harder. So that would be an example of really using that moving average as my decision process, either to get out of a trade that's not working initially, or if I'm ready to take profits and I haven't taken profits on the high, I'll try and be the first person out to do that. There's eBay in the sim trade. We already talked about that. iRobot, we'll talk a little bit about that. It showed up on this A table scan, which is essentially turning into the COVID ID play. All these companies are the winners that seem to just not want to go down, and we'll kind of go through those in a minute. It's fascinating. And then GDX, I'm playing that GDX by way of this triple nugget. So if you're gonna get into the competition, you got to be conniving, and you got to try and find a way to get the best bang for your buck. And so using high leverage double and triple ETFs is one way to really, collect some good simulated money for the competitions that'll be coming. When you're right, when you're wrong, it sucks. You're going to be out quickly when you're wrong, but when you're right, it really does work nicely. Did you want to add anything, Andy? I wasn't sure if you were.
No, it's all good. Yeah.
All right. So that was my last thought, I think, on that. Sim trading is available to everybody. And let's go in now to what I was going to talk about, the jam down. Okay. So I've talked about how last Friday on eBay popped up on here, and let's just see if anything else interesting came through today. I'm going to go to history for today, but I will share this, but I don't think you're going to want me to share it yet because I'm going to refine it a little bit, and we'll take a look. All right. What we want to do is we want to look for today. We want to look for that blue arrow and see exactly where that blue arrow was. Pretty darn good entry there. SSRM, pretty darn good entry there. You can see it's just perfectly on the daily chart. I'm going to have to charge. I'm not giving this out for free, guys. I'm sorry. I'm going to charge for it. Another nice entry. And then I'm kidding. I'm not going to charge for it. Another nice entry. Oh boy. Yep. Flat. Hey, they're not all going to work, but hey, as long as you're comfortable in knowing that you can manage something that's a duplicate BTG, that's the first time we saw that one. Okay, so you get the idea. This thing is just picture perfectly giving us entries on the daily chart there where the trend is up. Look at that 10 period hold, held there. Why wouldn't it hold here? And if we're going to trust it, let's use that contrarian moment when everybody else is a seller and all these people are panicking, and you're jumping in calmly and saying, I'll take this because we can trust it. How do we know we can trust it? We're going to back test it right now. I actually already ran a back test because it was running a little slow. So this is our base run right now. This is the first run that I made off of it. We're going to use this as our anchor. And the run that I made, we'll go through it again here, but the initial one gave us it's a 3-day hold roughly, and looks like it gave us 62 trades. Average winner was about almost $6. Average loser was $2.17. Pretty good return. Another thing bad on here is the 41% winners, which proves that you don't need a high win percentage to make money. There's your equity growth right there. So profit factor of 195, we can probably do better. So what I'm going to show you guys, and especially you guys that are getting ready to do the test drive, you'll have access to this. And once you back test something, we can refine it, and it's called optimization. And I'm going to do it right here. We're going to click into optimization, and I've already done it by the time of day. You can do it by price, but that's not really interesting. Time of day is very interesting because, as I've told you, I seem to like this scan when it's early in the day, because typically you're running stops, and then early in the day it reverses and closes on hopefully at or near highs. So looking at this 20-minute interval on my Pacific Coast time here, we see a lot of green, a little bit of red, but we got to go through that red to get through the end of the green. And what's happening here is we've got a pretty good trade count of things until we get to here. We can get rid of all these trades because as we get later in the day, we don't want that information. So let's run it again, just minus, or we'll stop it at 10:19 my time. So run again. Let's take a quick look at what we're doing. Start it early. We will finish at 10:19 as suggested by the data. And let's go through a little bit more. We can use the arrow key to click into that. Timed exit, you can see it's at market open tomorrow plus 2 days, so a 3-day trade. Risk management, I'm going to risk 2.5% to try and make 10%, and the back tester will close those out accordingly if they hit those. We're going to test 20 days, which really is 4 weeks. 4 weeks is kind of the way this market's been behaving the last, as we can see. We could probably go 25 days, but I'm not going to do that. I'm just going to keep apples and apples. That was my first run. We'll test the last 20 days. So here comes the new run. The only thing we've done differently is we have changed the time of day that we are running this. And it looks like Michael Franz got the servers really humming for us now. I got to tell him that. Okay, so now we can go back to summary and start to compare. All right, so we've got a much better profit factor. We've got less trades, but oh, look, we've increased our average profit and we have decreased our average loss. Pretty good. All right, that's the first scratch. Let's give it that first. Let's give it the second scratch and a third scratch, because I've got 2 more deeper dives that I like to do. And after we've done that 4th deep dive and we've refined everything, I'll certainly hand this out and talk about the best way to use it. So now we're going to go to optimization again, and we're going to go to this tab called other filters. And I find it interesting to compare these entries, how they do on the day when the market is up or down. And we can actually not worry about trying to guess. We can actually figure that out. I just need to find out where the actual filter is for that one. I think it's called S&P change. I'm sorry. Change, there it is, S&P change. I'm just going to go, what is the change today? So we're going to click into that, and now we've got something interesting. Let's look at half-point intervals, 0.5% intervals. Okay, looks like, look at this. Here's what I'm seeing. I'm gonna use that interval right there. Let me just try one more thing here, just to try and get a different view. Yeah, I'm going to use the 1% interval. It's much more clear to me here on the 1% interval. And what I mean is, we've got a nice continuation of contiguous green. But look at what happens. Once the market is up over 1%, once the S&Ps are up 1%, higher, 2%, we can knock out 14 trades right there that are not that great, because what's happening is the market's just up too high. But when the market's down or flat or down 1%, even right there, we're getting some really good returns. So let's work that out as a filter. We're going to go right to that particular level, and we're going to suppress that level. We're going to say, actually, we're going to go here. That's our max. 0.99 is going to be our set strategy max value of S&P change today. We're going to filter to where we no longer see this scan if today's change is more than 9.99%. And here comes that change right there. We'll go ahead and lock that change in. And I'm going to do one more scan. I'm going to do one more. Let's just run that. Let's just see what happens with that change. I got to run it from here, actually. Back test, because it's nice to see maybe the incremental changes as we make these optimized refines. Are you able to back test day trading? Yeah, you can back test day trading strategies. SAT, I'm just using it. Oh, look at that. This thing is getting greener by the minute. SAT, it's in the run again, timed exit. I can turn this off and we can do minutes after entry, but I'm choosing to exit. Theoretically, what would have happened if I exited plus 2 days at the market open? So it's wide open for you. Okay, so that's run number 3. We changed it, and now we've got only 36 trades in 20 days, so that's averaging 1.5 trades a day. We're way up over 3% now, 3.0 on a profit factor. Interestingly enough, though, our losses kind of grew a little bit on the average win-loss, so nothing big there, but we are less trades, more quality. I'll take that. All right, last run that we're going to do here on the optimization is, I like to see how does this scan do in relation to where the VWAP is, since so many institutions are interested in the VWAP. There it is, VWAP 1. We're going to do today's VWAP. All right, it looks like we're doing it in 25% intervals. Not really seeing anything jump out, so it doesn't really seem to matter. Actually, I don't know if that's the right filter. I think it needs to be, I'm not sure I'm doing that one right. Maybe I am. Oh, there it is. I need this one, distance from VWAP. That's what I'm looking for, distance from VWAP. Thank you very much. Let's try that again in half-point intervals. All right. Well, the majority of our trades in this back test are happening in this dark blue region. So these other one-offs are not a big deal. And it looks like there's really not much I can do here to chop through there. There's no contiguous green. So I'm going to go ahead and say that's really the best we can do. So with that said, on that run, what we now have is a scan that, oops, I closed that last one. We can run it again. A scan that when used for a swing trade, looks like we can kind of trust this. And Andy and I always talk about, the better the entry, the better the staying power in the trade. This thing is serving up some really good entries. Let's try one more thing, just out of curiosity. What happens if we run it for 30 days? Do we lose anything? Here we go. Let's try 30 days. Ideal. We changed it. Oh, but I just ran it again. I just duplicated it. What did we do? I forgot what we did differently. Ah, we did the amount of trades. It looks like it didn't work. If I want to do one more thing before we leave and say, what if we try and hold this for today plus 5 days? I'm going to guess that it's going to degrade. I'm going to guess it's going to degrade. So back tested based on historical. No, it's based on historical prints on the time and sales, not level 2. So it's always going to be based on time and sales and what's coming through. Have you gentlemen call? I think you can tell me what his name.
Talking about Sean.
Oh, Sean. Oh, okay. Sean, yeah. Okay, so this last one, we're going to let it run here, and we'll see what we get. I'm pretty sure it's going to degrade because my theory of 2 to 3 day holds often works better than a 5-day hold, especially in swing trading. But we'll tap dance our way to the end here. Actually, not too bad. All right, so there you have it, everybody. The data doesn't lie. Let's stop teasing. Let's go back and give you guys, go back to real time. There we go. And I will give anybody that wants a copy. I'm going to drop this into the chat window of the go-to webinar. It's called the Jam Down Buy Alert. You can day trade it, you can swing trade it, whatever you want to do with it. Well, that's one of the things, Jeff, that's a good question. Jeff says you're over optimizing a strategy. Now, one of the things you can do, and this is the way I like to do it, is I like to sample 20 or 30 days and then go back and run it for the full 60. However, that's the way I would like to normally do it in a market that hasn't been as nutso as this. All right, so we know 20 and 30 days is pretty solid. What happens at 64 days? It's a good question, Jeff. We're trying not to do curve fitting. I totally get your point. However, I feel that we're going to get a sample of that horrible February data where this stuff just didn't work at all, and it's probably going to throw it out. So I'm anticipating that. So this is the way you would combat that, Jeff. You would do all your optimizing and sampling, 25 or 30 days, and then go ahead and run it for the full 60 and see if your current settings really go back and translate. I mean, this thing's still doing okay, but I think you can see that I'm going to guess this was our big market drop right there, and that strategy was working great coming into the big move, and now it's working great again. So if you take that segment in 3 different segments, it is what it is, but it's a good question, Jeff. It's a good question. All right. I think we're all caught up. So what we're going to do now is I'm just going to kind of highlight. Oh, you know what? I never handed it over to you for
right.
AI. That's why I heard you over there waiting with your mic. What's he doing? Where's he going?
Well, I sent you a Slack message, but I'm sure you.
Oh my God, everything's all covered up.
I understand.
I see it.
All
Now,
right,
well, let's go ahead and do that. Backtrack, yeah.
Yep. Send it over real quick, or I'll grab it if I can.
You better grab it.
Not good. All right, we're just going to talk about the Holley Neo. All right, we've been focusing on the Holley Neo because it's one of our newest segments, and it is, gosh, this headset I'm using really have a muffled sound in my ears. So anyway, yeah, Steve's the same way. We're trying to focus on the Holley Neo because first of all, it has outperformed the other two. Michael is in the kind of in the process of kind of overhauling these right now. But this is one that was released in November and it's been performing well. So real quickly, let's just go over the trades from Holley Neo today. You can see the other two strategies, they did fine, just marginal gains here. But the Holley Neo spit out 4 trades today. Now, little little thing here that I really don't like and we need to fix is we did have the symbol called out twice, and that's ADVM, but it was from different strategies. One was a breakout long. If I click on this, you are going to see the 2 buy signals. So I'm okay with this versus the way sometimes the same symbols called out in different strategies or different segments, but it's the same strategy at the same time. We're trying to prevent that, and we're doing a good job of that. We're eliminating most of that. But in this case, the stock was so strong that the breakout long was called. You can see the first signal right there at $17, and then later on, boom, bought the pullback right there on a strategy called pullback long. So 2 different configurations totally, but they both fired today. So I'm not as upset with it, with this as I am if it's called out twice from the same strategy in other words, a different segment. But let me just kind of give you a breakdown of the difference you're seeing over here in the channel, because I know we have new people. I know I do this about every other week, but it's good to do. If you look over here in Holley Neo, you see a profit of 309. But if you look over here in mine, okay, I need to get me a little, I don't have a pen, I'm on my laptop right now, but you can see a profit of 651. You may be asking why the difference. Why is this twice as much as what I'm seeing in the channel? Well, this is because in our channel, it calculates everything based upon buying 100 shares of every alert. Whereas what's really cool that you can do in your software is you can set what size, your trade size. You just go to Tools, Options, and you go to AI Trade Size, and you can see here I have an amount based upon stop loss. So in other words, I want the software to go out and buy the amount of shares that if the price goes to the stop, I will lose $200. Okay, so obviously under this method, you're going to get bigger trade size. You can see 274 here for Rambus, 769 for this one, and then 105, 235. Whereas over here, everything would just be 100 shares even. So anyway, the big winner today was ADVM. Beautiful, beautiful chart. What's happening here? Well, let's take a look on the daily. Why do I think this is beautiful? Well, it's doing huge volume, relative volume of over 7%, and we have a major breakout. It's what you call a gap and go. Let's scroll back on the daily, and you can see they're just beautifully taking out these highs over here for the year, and that is what you call momentum, okay? And I usually don't like to take trades in the first few minutes of the day, but when I see something like this with huge volume, I'm tempted, and a lot of times will do it just because I have a lot more confidence in something like this continuing with the huge volume and the range breakout on the daily chart. But that's about it, Steve. I'm not going to go over the other ones. They were both small losers, small winners, but that was the big winner for today, and I'll send it back to you.
All right. Just typing there we go. Show my screen. Should be back.
Mm-hmm.
Good. All right. Good crowd today. Good questions, keeping us on our toes. Haven't had this many people in the webinar forever. I was just thanking Michael Franz too for getting the hamsters on those servers fed so they can run those back tests a little faster than we were this morning. So guys, the last little segment before we walk out here is I just wanted to show you, my A table scan, which I'm going to, again, not tease. I will just drop it in right now and show you why I find it fascinating right now. It's basically the A table, Phoenix rising from the ashes type of stocks. Now let's look through a few of these here. MTCH, Match.com. I think we can make a case for why Match.com might be a bit more active right now with people on lockdown talking and chatting and maybe trying to hook up when this thing gets over. iRobot, I'm long this in our other account. I'm on the, also mirrored it here in the Swing account. let's talk about this for a second. You know, the A table will bring up great ideas, but they might not always be perfectly set up the way we want them, like the jam down buy is the perfect setup. So I'm totally willing and content to let this thing waffle back and forth. As a matter of fact, tomorrow I almost hope it goes down and jams down and touches that 10 period, because then maybe we don't have to wait another day for what I think this thing wants to do. But iRobot makes sense. You know, the same people that are on their Pelotons, they can't get people to come over and clean their house. They're going to go out and buy an iRobot because they want to do it. I'll try in a second, Mike C, the anchored VWAP. I don't use it as much as Brian. I'm strictly using my 10 period SMA. Now Brian makes some great points of how to use the AVWAP, and I would use it right here on this clean chart. I would say, let's just do real quick so we can. I would say, Mike, this is how I would look at that particular. If I can get a zoom out here, there we go. So I would take a clean chart, take my anchored VWAP, look at the top of the market, and this is where everybody is. So everybody that, you know, since the top of the market, the anchored VWAP acted as resistance here, it acted as a bit of resistance here, acted as support. So you want to make money with that anchored VWAP. If we lose that anchored VWAP, then don't be going long. That'll save you money and then hopefully in turn make you money. So back to the COVID winners here, the Phoenix from the ashes. Phoenix is going to be, here's Wayfair, all right? You can't go to a showroom and buy furniture right now, but apparently you can use augmented reality on your phone and see what that cutting board looks like in your kitchen. That's a pretty cool idea, and the price action is confirming that. Not only that, you know, if I'd have been paying attention here right about yesterday, boy, that close at yesterday was a pretty darn good buy. Why? Because it sideways action after a big push, moving back up again for a possible another moving day breakout. Actually, it had earnings, so that's a tough call. You can't go against earnings. That's gambling. But nonetheless, it was setting up just beautifully. Peloton, I joked about it a minute ago, but people can't get to their yoga studios and work out. They're buying Pelotons, the ones that can afford it. Swift Transportation, I have a feeling they're taking on a lot of transportation right now. Pets, getting their pet stuff sent to them in the mail makes perfect sense. Pizza, another good one. I saw Carvana on here. People can't go to auto dealers and buy car. So the whole point is to try and just look through the scan and find things where the jump rope might be setting up. And I didn't really see anything that looks like it's a perfect setup at the moment. But the point is, there's always something on here. And the higher up it is on the scan, by the way, means there's more short float in there. The higher the chance it might have a short covering rally. So that's scanned and available as well in the chat window. I put that out. Let's see, which scanner would you follow? If you want to be a swing trader, Hector, the one I just showed you is really nice here. You just got to try and buy it when it's on a trend line. The last two scans that I've dropped in there, they kind of work hand in hand. They're going to be strong stocks. On this one, the jam down buy is going to show us those strong stocks when they're having a momentary weakness, and usually that momentary weakness early in the morning can be an interesting spot to buy. So that's what that one is set up for. As far as options go, we don't really have a lot of great scans for options. I'll just show you real quick, and I'll give Scott a heads up here. We'll bring him in after this question. But if you go to our search tab and you have any questions about what we offer, do we have Bollinger Bands? Yeah. You know, do we have standard deviations? Yeah, we've got those. Do we have Ichimoku clouds? No, it looks like we don't have anything for that. But for options, the keyword, all we're able to really provide you are big jumps in scan and volume scans. A jump in put call volume, a jump in put volume, a jump in call volume. But other than that, you know, there's no sweeper information, there's no strike price, there's no expirations and things like that. So we can help you with options with put and call, but to be honest, Sheetal, the relative volume indicator filter that we use is probably going to pick up on a lot of the same stuff you'll see in there. So, all right, well, that's it. I've held the crowd too. Nobody seems to have gotten bored and hit the exit. That's always, you know, that's always good. I keep an eye on that to let me know if I'm starting to drone on and lose people's attention. So thank you all for your attention. Thank you all for your questions. I'll go ahead and bring the slideshow back up on here, and Scott can kind of make a few announcements at the end. Probably on mute. Scott, there you go.
All right, there we go. Different setup today. Yeah, a couple items before we leave. There's a new ebook that we launched semi-recently, and you all should get a copy of it. It's free. Just go to trade-ideas.com/earnings. It's got some really great concepts to how to take earnings season and use it to your advantage. There's also some cloud links in there that you can use to import some scans to your layout that are from the ebook. So trade-ideas.com/earnings. We've got a test drive starting on Monday. Go ahead and reserve your pass. You get to try out all the premium features. This is a great chance for standard subscribers to try out premium and see what's going on with the AI and the extra features you get there. It's a great way for new people to kick the tires and experience all of Trade Ideas, all the features, real-time data, just under $9 for 2 weeks. So don't sleep on that. Go ahead and sign up. You're going to get early access on Friday right after the close if you sign up in advance. That way you can get used to the tools before we start. So just go to trade-ideas.com/test drive and sign up for that. Got a podcast. We published a podcast about how to get trade ideas on your Mac or any platform. That was the most recent one. We've also got some other good interviews we published recently. So just search for Trade Ideas Podcast wherever you listen to your pods and subscribe. You'll be ready to hear the next episode, and you can give a listen to the previous episodes. We've got a discount code, April Showers, all caps. And that'll save you 15% off any subscription or Brokerage Plus license. Also, 15% off your upgrade from standard to premium. April Showers is good for the remainder of the month. Any questions, email us, info@trade-ideas.com. Facebook.com/TradeIdeasPro is the page to like on Facebook. You can follow Steve Gomez on Twitter @TodayTrader. Also follow @TradeIdeas and find our other handles, and you'll see them all posting together. Follow them too. Again, any questions, info@trade-ideas.com. We'll get the replay of this video up tonight or tomorrow morning, and you will get an email reminder tomorrow with a link to the playlist where it can be found. Thanks, everyone. Thank you, Steve. Thank you, Andy.
All right, see you next time.
Thanks, everybody. I'll see you on Thursday.